Wait a minute. You want to buy a house next year in this market? Really? Man, if you buy a house next year, rates are at an all-time low. You should definitely buy a house next year. Are you crazy? You're going to buy a house next year? We're on a 10 plus year run. The market is definitely going to crash next year. We're due for this giant pullback. You know what? We're at an all-time low in inventory. You should definitely buy a house. You're going to make a fortune if you buy a house next year. It's going to be awesome. There's lots of mortgage advice out there. So I thought I'd do a video giving you what I think are the key things to look at for buying a house next year and what you should consider, if you're going to take the plunge and buy a home and become a homeowner or even upgrade your house next year. Hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker, coming to you with my advice on buying a house next year. And my first advice is take advice from people like me with a grain of salt. Realtors, lenders, mortgage people, investors, people whose income and livelihood are tied to the real estate market. Let's just have it be honest. It's going to be hard for someone like that to give you advice not to buy a home. Not only does our income and our livelihood revolve around that, but we, live, sleep, and eat home buying all the time. So one, get other opinions. Take, in any field, when, if I listen to a guy who's a gold expert, and of course, what does he always say? Now is the perfect time to buy gold. So again, keep in mind who you're talking to. Remember, even me as a mortgage professional doing this for the last 20 years, I can only give you from my experience, and my experience has been to be heavily involved with buying and selling and being part of the real estate market here in Central Florida. With that being said, I'm going to give you my best mortgage advice that I feel like I can give anyone, especially if you're a first-time home buyer, but I would really say for anyone that's going to buy a house next year, the year after, or any year. And this may be controversial, especially if you're a real estate agent, but I would say do not buy a house for appreciation. Oh my God, are you saying a house may not appreciate? Yes, I'm saying a house may not appreciate. After doing this for 20 years, there have been many years where houses have not appreciated. There's been years where houses have depreciated. And at some point in my lifetime, houses will either not appreciate or go down in value again. And you can guarantee that's going to happen because all markets are cyclical. So the only reason you should buy a house is you need a place to live. And if you need a place to live, you should be paying, instead of someone else's mortgage and rent, take that rent and pay for your own house. That makes you take a little bit of a longer term view. If you're going to buy a house and sell it in 2 years, that may work out in your favor. In fact, if you did that 2 years ago, you'd be like, that was the perfect thing to do. Will that be the perfect thing to do in the next 2 years? Who knows? And so if anyone tells you 100% what they say is going to happen, they're still just giving you their best opinion. When the market pulled back, when I was involved in 2009, got to remember the year before was a record year. So things do change and can change quickly. A good question to ask yourself when you're buying a home is, if this house, I'm selling it 4 years from now, and I sold it for exactly what I paid for it, would I be happy? Because that's a great question, because you really are buying a house to live. And remember, even if the house doesn't go up, you are paying a mortgage down, where over time you actually have an asset, a thing called a home, that can be paid off or sold and trade the equity in for something else. But if you're buying it 100% for the appreciation, at least in my opinion, this is advice I've given to my kids and advice I would give to anyone, is if you're buying it 100% for appreciation, that's called gambling, betting, and you're betting that the market's going to go up, and that definitely could happen, but you have to be okay that it definitely may flatten out. And though I don't believe this, it could go the other direction. That's why it's called a real estate market. All right. Another piece of advice is, so here's something like that seems counterintuitive. Don't pay any debt off. Don't do anything crazy with your credit, income, or anything. So many times I've talked to somebody who they had just paid a bunch of debt off to try to get their score up, but because they did that, now they don't have the money maybe to put more money down or to do something different. So before you make any big changes, I would get pre-approved. even if you're 6 months out, even if you're a year out, a good mortgage person will take the time with you up front. And though obviously your situation could be different between now and a year from now, you want to have a goal, a target. Plus, it may come sooner. So many people tell me, oh, I'm going to get pre-approved and buy a house 6 months from now. Lo and behold, 3 months, they buy a house. So maybe you've got money saved up and it will make sense to pay off some debt. But maybe you're going to do an FHA loan and getting your credit score up really doesn't make a big difference. And it might be more important to actually pay a particular debt off that raises your ratios. Remember, when you're qualifying for a mortgage, it's a combination of down payment, credit score, and then debt ratio. And as a mortgage professional and someone that's doing this a long time, we can take what the pieces of the puzzle, especially if you're not, if you have some time, and use those assets and use them the right way so that you qualify for where you want to qualify for, and at the same time do what you need to do to get the best, get your credit in a situation where you get the best rate. Because remember, some loan programs like conventional loans definitely are credit score driven, or FHA and things like VA and USDA are way less credit score driven. So it really depends on your situation. So I would say before you make any big changes, if you're going to buy a house next year, don't do anything, if you've got money saved up or you were going to pay down a bunch of debt, before you do any of that, I would talk to somebody that is, that you trust or you get referred to, or if you're buying in Florida, reach out to me. I'd love to help and get advice on what is the best way to use those resources to get you the best deal on a mortgage. Know the market. It's important for you to know the market as it is when you're buying. And right now, at least in Central Florida, but I can tell you this is the same pretty much nationwide in almost every market, is inventory is extremely low and rates are at an all-time low at the same time. This is not a first-time home buyer friendly market. And it's important to know that. After doing this for many years, when you're a first-time home buyer, and we've all been there, usually you have a little less income, right? Because you're usually younger and your income is growing. And the big challenge is you're saving up money for down payment. And so again, you're using your resources, you're saving money and trying to get enough money for down payment. Well, remember, when you buy a house, not only is there a down payment, but you have upfront costs like inspections and appraisals. On top of that, you have closing costs. Now, there are all kinds of creative things you can do with closing costs. One of the main way that, first-time home buyers get help is they get the seller to pay those costs for them. They build it into their offer, or the seller agrees to pay that as part of the negotiation. The challenge with that is you're probably not going to be the only offer on that house. And your agent is going to tell you, if you're asking for closing costs, your offer is probably not going to get accepted. And that, in my experience, is 100% true. Rarely right now, with Central Florida, there's 3,600 homes in the market. There has never been this low of inventory, at least not in the time that I've been doing this. And that means that you are most likely, for a house that you like, going to say, wow, there's other offers on that house. So it is a good time to be saving money. If you have any way to get help, most loan programs allow you to get gift funds and do some things like that where you can actually get help from family members. And there are some loan programs where you can actually bump up the rate and get some of those costs absorbed in. We'll pay all your closing costs, right? That means that basically they're building that into the loan somewhere. And there are ways to do that. And the better credit that you have does allow some more options. So again, it's back to getting pre-approved up front, because then you're not guessing. By the time you get done pre-approved, you should know what loan program you're doing and why, about what rate you should expect. Remember, you're not locking in a rate up front, but you should have a very clear picture of what your rate's going to be, what your payment's going to be, how much money you're going to need, and if you're going to need help with things like, closing costs and all that. So when you get done with the pre-approval, you should not just be getting pre-approved like knowing how much you qualify for. That's what most people end up finding out. You should work with somebody that does all that information. And there are other good mortgage people out there. You can Google them. You can Google Rayce Robinson, but make sure that someone is, partnering with you. The reason the big realtors don't refer the banks out and those kinds of things, unless you're a really sophisticated buyer, is because they really don't care. There's no Mr. Wells Fargo to care. And so you really want somebody that's going to hold your hand, let you understand the process, know what the costs are, so that you can be confident when you buy a house, next year. And my last advice is to be patient. You may not get your first offer accepted, but most of the buyers that I work with, even the first-time home buyers, if they stick with it, put some offers in, do them quickly because houses will go fast. But if you're patient, you will get a house. You just can't get discouraged if the first one that you try to get, your offer doesn't get accepted. And again, get fully pre-approved, because when they're analyzing your offer over other ones, you want to be able to say, not only am I pre-qualified, I'm fully pre-approved and ready to go. That being said, if you're buying a house in Central Florida, I'd love to apply for at least trying to earn your business. No lender fees, straightforward mortgage advice you can understand, and really just earning your business every step of the way. So with that, let me know if you have any questions on the pre-approval process, on even my opinions on next year and what's going to happen to the market, and let me know what I can do to help. All right, I'll talk to you soon.